Okay, hello everyone, welcome back to my channel. In the previous video, we had an example like this, and I explained how the market makers create uh, things like support and resistance in order for you to do the opposite of what they want to do. Actually, let's say if they are buying here, they want to make you think that they are selling. So they want you to sell. So they want to buy, they need sellers, and they need to convince the retail traders that, for example, from an area like this, the market is going further down. So they get the sellers, their buy deals open, and they go and collect these stop losses, even here and potentially here. So the intention of the big boys in the market is for you to trade against the market. And in order for you to understand the plan of the market, this support and resistance and things like Fibonacci and many of the indicators that normally retail traders use are not going to work. They might confuse you. Most of the time they confuse you and they create wrong signals. So in order to read the charts properly and in order to understand the market plan, we need to acquire new skills. We need to see the charts in a different way. There are many things that we're going to have to discuss, but the most important thing is which time frame are you seeing the market. A pattern like this, you can see it in a 1 minute time frame, 15-minute time frame, 30 minutes, 1 hour, daily, monthly, weekly. But we as retail traders who want to open like 2 trades per week on a certain chart, and we hope that if we open 10 deals on a certain chart, we want 6 of those deals to be profitable at least. I advise you to look at the charts in the 4-hour, 3-hour, 2-hour, and 1-hour time frames in order to read the markets. Opening the deals is a different thing, but in order to do the analysis, don't go to 15 minutes and 30 minutes and 45 minutes to understand the market. You must go minimum the hourly time frames. Sometimes you will need the daily also to read the market, not to open the deals. So let's say this is a 4-hour time frame. In a 4-hour time frame, let's say you're watching the market live here, any chart. The first thing you are going to see is the most recent sharp movement. The most recent sharp movement. We don't look, for now, we don't look at this right side of the chart. This is the old news. We are going to use it, but not now. We want to look at the right side of the chart and the most recent movement. The most recent, if let's say this is the 4-hour candle, we are looking at a 4-hour. Let's say this is the 4-hour time frame, and this candle has already closed. It means before this candle closes, we don't make any judgments yet. We wait for this 4-hour candle to close, a 3-hour candle to close, and then we'll see how and where it closed. Before this, the most recent sharp movement is here, which is a declining candle. But we wait long enough. As you see, this is 4 hours, another 4 hours, another 4 hours, and another 4 hours. So this is total 16 hours. In these 16 hours, we have been doing nothing. We have been just watching the market for a pattern, for the dust to settle, for in order to see what we need to see. So as a retail trader, I would say 90% of the times you are just watching the market until you see what you need to see. What you need to see is a clear stop loss and a clear target. So let's say you have seen this sharp movement. This is the end of 4 hours. Then you mark this area and this area. These areas we call order blocks. The order block is a price level. It's not a point, it's a price level from which a sharp movement has originated. You have one sharp movement here from this area and there's one opposite sharp movement from this area. So you have one order block here and one order block here. It means the big boys, they have placed a lot of sales orders here and a lot of buy orders here. So the decision that we're going to make now is whether to sell from this order block and target here below this order block, or to buy from this order block and target here. This is the question now. Remember, we are watching in a 4-hour time frame. We have seen a sharp movement down. I will explain how. I have already explained why this movement, there is sharp movement correction, and another sharp movement. Why market moves like this? Because they want to confuse the retail traders. For example, here the plan was to sell. The big boys plan was to sell, but they fooled a lot of retail traders to buy here and put their stop loss here. So they collected this stop loss of the buyers here, and they got enough buyers to push the market down. Again the same thing, again the same thing, and again the same thing. It's not going to be going on forever. We are looking, if we are a buyer, we are looking for a reversal. A reversal, we are looking for an order block to form from which a sharp movement originates. So now, at this point of time, our decision is whether to buy from this order block. The price must go back here. 90% of times the price will go back here and form the next movement. Or the opposite scenario could be, the alternative scenario could be this order block. There are more sales orders here than there are buy orders here, and then the price will touch here and go below this order block and create another new leg downwards. So our job as a retail trader is to decide whether we want to buy from here and target here with a stop loss here, or to sell from here, stop loss here, and target here. How do we make this decision? We are not looking at support and resistance and Fibonacci and indicator. We are not looking at this. We are looking at the indicators, at the order blocks. So, in order to make a correct decision in a situation like the one I explained just now, the most important thing which can help you make the correct decision is, if this is an order block, a buy order block, and here is a sell order block, and the prices have moved here, and now we expect them to go back here and come back here and again go up or close below this. So if the question is whether to sell from this order block or to buy from this order block, you have to understand, you have to watch how the area between this order block to this order block is covered by what type of movement. In the market, you can see three types of movements. In general, three types of movements. You will have the sharp movements, either up or down. You will have the choppy movements, if we call it like this, and we will have the consolidations. Consolidation is a movement like this. So we are going to discuss these types of movements, especially about consolidation. We're going to talk about it later. But today, in order to get the answer to the question whether to buy from here or to sell from here, the answer, the very short answer that I'm going to give you today is to watch the movement from this order block to this one. If this is a sharp one, then most probably you will see a choppy movement, a correction downwards, and another sharp move. I will draw this again to clarify. I'm trying to give a very simple answer, and then we are going to, in the future videos, give you examples. So let's say you locate a sell order block here and a buy order block here in a 4-hour time frame. It can happen in any time frame, but we go for the 4-hour time frame in order to make fewer mistakes. So let's say the price has moved here. That was the previous sharp move. And then you see something like this. And now the question is how the price will travel back here. If this is a sharp movement, then you want to watch, does it come back to this order block like this or like this? If I explained in the very first video that, or in the second video, that we want to see the market in a bigger time frame than this, like in a weekly or daily or monthly, to decide whether it's better to be on the buy side or the right side. And I explained to you that in a market like gold, I'm looking for an opportunity to buy. I don't confuse myself. Oh, it's the right time to sell, it's the right time to buy. Yes, when you are very professional, you understand the market, yes, then you consider buying and selling as well when the time is right. But for now, as beginners, we are looking for an opportunity to buy. So we see an order block forming here. This is not all the information that you need. I'm trying to go into it step by step. But anyway, you see the triangle shape here and the sharp movement. What you want to see next is that the price goes back here slowly, slowly, not with another sharp movement. If it goes with another sharp movement, don't take any chances, don't buy yet. But if you see the price goes here and then you will see a small candle and then another candle and then another candle and then like this, Buy from here, put your stop loss here, and expect another sharp movement of a 1 to 3 risk to reward. So that is the formula, the very simple formula that I'm trying to give you, a recipe to make money in the market. I do a review and we close this video for today, and then we will explain more. So since the beginning, we have had some lessons. First, decide the general trend of the chart you're trading in a weekly or monthly time frame. If the result is that the market is perfectly ascending, then buy. Look for opportunities to buy. If it's ascending, I will make it like this. If it's been ascending, look for opportunities to buy. If it's descending, if it has been descending, look for opportunities to sell. That's lesson number one. Lesson number two, we said don't buy into classical technical analysis. In the previous video, I explained. Today, I tried to briefly explain three things. Which time frame you use, in order, you have seen in the big time frame, you have decided that you're looking for opportunities to buy, for example, and then in order to get closer to the point that we can open a deal, use the 4-hour time frame. First of all, locate an order block. Order block is an area on the chart from which a sharp movement has originated. And then, if you see a sharp movement from an order block which goes near to the next order block, then see whether you see a small, a choppy movement, a correction type of movement, not a sharp one, back to the order block and buy again and target 1 to 3. That is the very simple recipe that I have tried to explain to you in the past few videos. We will discuss it further later on, and we will get into more details to make fewer mistakes and to make more money. Thank you very much.